Yo, what's going on? It's Kirk Rich, all right? Look, I'm here to add value. I'm not from the typical influence culture where people do all these tips and tricks to try to get you to engage, give you some fluff and lead you on. I'm all about adding value. I can't tell me how many times I've clicked on a video and it's just a bunch of fluff, all right? So, matter of fact, y'all see the title, A Guaranteed Way to Pass Your Prop Challenge, right? This is the guaranteed method to pass your prop challenge. Now, what qualifies me? What qualifies me? So, I'm the founder of LYMG, right? Leap Your Money Group, and we've helped so far in 2023. I don't know what year you're watching this or what day you watch this, but by the time you see this, it will have grown even more. Like by literally tending and following all of the prop firm challenge rules, right? Which is important, right? We didn't throw bots on the account or anything like that, so that could get your account banned. Excuse me, like my shirt neck looking like this. But but yeah, we've helped at least a dozen people pass their prop firm challenge, get funded. People are getting paid left and right, and we're about to go on a run here at LYMG. I'm telling you right now, we're about to go on a run. So I'm gonna share you at least three ways, right? This is a guaranteed method to help you pass your prop firm challenge. All right. Number one is mindset. Okay. Number one, mindset. Why? Because there's a great chance, there's probably a 90%, there's a 90% chance, as a matter of fact, that you're taking in information wrong, right? Imagine if you were trying to swallow, imagine if you were trying to sip a steak through a straw, right? Your entire experience with the steak is all off. So you're thinking about Wagyu, Kobe beef, picanha. You're thinking about all this different stuff. Is it choice grade? Is it this? Is it that? You're just getting it wrong from jump. You're trying to consume it through a straw. A lot of times with information, especially you get caught in the salesy YouTube pitch. Oh, the one free strategy that's going to make you $1 million. How I took $3 to $3 trillion in 3 days, and you follow those. It's salesy, right? It's salesy. The key is not the information. The key is not the education. All right. So I'm going to give you some real keys, some real education, some real information. The first thing that you have to do is switch your brain off from detailed learning to principle-based learning. Detailed learning is like me having a junk drawer and a bunch of things in that junk drawer, and now I'm trying to remember all the things in that junk drawer. That's what's happened to your brain already, whether you like it or not. If you were a part of the groups that were supposed to be an educational platform, but they were really a sales and multi-level marketing structure, and no shade to them or anything, but you thought you were getting something more educational based, but it turned out to be more sales based, you already have that information in your head, right? You already have that lifestyle marketing in your head. You can't do anything with that. You can't erase it. There's no little Will Smith Men in Black thing that go bing and erase all that. You already have it, right? So then you went the YouTube route because you probably spent a lot of money over there. You went the YouTube route and you start looking at all the best strategies, the best this, the best that, but you still might not be profitable or as profitable as you want to be to where you don't have to work, right? And you miss all of the trades during the US session or majority of the moves during the US session because you're at work, right? And it pisses you off, right? Oh, don't worry. We're going to get you out of that cycle, all right? And it's when once you consumed all of that stuff, right? And now you're in a place where you just know a bunch of details. That's what's wrong with you. So when you go in to learn another topic, you go in to learn another strategy, you're consuming more details. It's like trying to remember everything in a junk drawer and trying to remember exactly where it's at. When you are caught up in detail based learning, you have so many details. You can get the details right, but you get the order wrong, and then that would lead to a loss. Switch your thinking to principle based learning because the principles will lead you to the details. All right. Here's what I mean. Okay. In an uptrend, we want to buy in an uptrend, right? And we want to buy low in an uptrend. So an uptrend is always going to look like a set of stairs. Boom. It goes up, stairs, up, stairs, up, stairs, up, stairs, right? And then when it retests, it's going to come back and test the level of the stair that you step on, right? And then bam, I always want to enter low in an uptrend. So the principle based thinking is enter low in an uptrend, right? That way you catch the momentum of price going up. That's number one, right? So I want to buy in an uptrend. I want to trade with the trend. I want to buy in an uptrend. I want to sell in a downtrend. So if I want to enter an uptrend while it's low, I want to sell in a downtrend where price is high. This is what throws the average consumer off, because when you're thinking sell, well, I want to sell when price is low. That's the average consumer mindset, right? Principal mindset. As an investor, I want to sell when price is high. Think of it. If I buy a house and I fix it up and I get the value of that price high, I want to sell it while that price is high, because that's when I'm making money. That switch right there, bam, will always help you. So now when you're in it, now when you are in a trade, right? You're not trying to, you see price tanking, tanking, tanking. You try to jump in on the momentum. It seems like as soon as you jump in the momentum, the price shoots back up and stops you out of your trade, right? So now you want to sell when price is high. So if it's downstairs moving like this in a downtrend, stare that stair level right there, then down. Creates another level, down. Creates another level, down. You wait till it goes up, hits the previous level, bam. I want to enter my sell right there. In the LYMG, in the LYMG lessons, we have the confirmations to show you, okay, this is when I want to enter the sell. I'm waiting on this confirmation. It's hit that level. I need one more confirmation and I'm good, right? You can hit the link. You can hit the link in the description to get the LYMG X Factor bundle. It's going to help you with that, to learn the confirmations, right? But don't worry, we're going to keep going right here. And then that's when you watch price drop. So principle thinking, I want to buy in an uptrend and I want to buy low, right? And I always tell this to the team right here. Think about it in terms of traffic flow. I don't want to get on I-77 North and start driving south. That means I'm going to run into something. It's the same way on the charts. It's the same way on the charts. I don't want to get in an uptrend and start looking to sell just because such and such, oh, Johnny 500 pips said that it's going to drop this, that, and the third. No, I don't want to do that. I also need to know, here's another principle. The charts are going to reveal the answer to me. I do not have to rush. I do not have to assume. I do not have to predict. RAP, rush, assume, or predict. You don't have to rap with the charts. Rush, assume, or predict. The charts are going to reveal exactly to you what to do, and you just need to be able to be there to read and react. If you find yourself predicting on the charts, I'm gonna just keep it honest. You're being a douchebag. You're being an asshole. You're trading with pride and not with precision. You're, oh well, I can see prices going. You want to be a talking head. You want to be on ESPN. You want to be on those gambling sites. You want to be a DraftKings analyst. You do not want to be a profitable trader. Don't be a douchebag and try to predict the market. Let the market tell you exactly what it's doing, and you get paid in the market and you go about your business. All right. Principle level thinking. All right. Another thing is that you need to do when it comes, especially to mindset. Matter of fact, I'm gonna give you one that's strategy. I'm giving. Here are the gems, right? And come tap in with us in the LYMG family, because, like I said, we've helped real people in real time get funded, make some real money, and it's been over a dozen. All right. So another one is top-down analysis, right? Whenever you start your analysis, start on the higher time frame, right? You get the trend from your higher time frame, you do your markups on the medium time frame, and then you enter on the lower time frame, right? So trend on the highest time frame, all your extensive markups, whatever it is that you do, right? Support and resistance, order blocks, all of that stuff. I like my order blocks on the highest time frame. I mark off my order block. So we call them launch pads, because that's where the order is launching from. Price is launching from the launch pads, right? We mark those off on the higher time frame and on the medium time frame, and then we enter on the lowest time frame. This way, you're always exploiting mismatches. You stay exploiting mismatches this way, and once you get a mismatch on the charts, there's a great chance that the trade is going to go your way. All right. So top down analysis. That means what? Principle level thinking. That gets you out of so many bad habits. I see so many new traders go, well, Johnny 500 pips told me that when I invest, just go to the 5-minute chart. use this strategy, I'm going to get paid. Yes, something may be visible on the 5 minute chart. It may look like a clean buy in the 5 minute, right? But then you go to the 1 hour, the 4 hour, the daily, you're in an overall sale and you're about to enter a buy and it's about to run into an order block and knock your trade all the way down. And now you think trading is a scam, right? This principle alone, top down analysis will have you looking at the top. It's like looking at it from a bird's eye view, right? You zoomed in, you can see, okay, am I in uptrend? Now, am I in a downtrend, right? If I'm in an uptrend, what am I going to do? Buy. And where do I want to buy at? I want to buy low, so my price has more room to go up. If I'm in a downtrend, where do I want to sell? I want to sell high so that my trade has more room to go down, right? So now when I take that principle and I apply it with a top-down analysis, it doesn't matter what time frames you want to use. If you're a swing trader, you could be looking at monthly, find a trend on a monthly, mark it off on the weekly, extensive mark-offs on the weekly, order blocks on the monthly, extensive mark-offs on the weekly, and then enter on a daily. You see what I'm saying? If you are more of a scalper, you could be looking at 1 hour for the trend, 15-minute for the extensive markups, and then 5 minute for the entry. You see what I'm saying? But those two principles right there, right? Top down analysis, along with I buy in the uptrend and I buy low. I sell in a downtrend and I sell high. Those right there are going to help you. And here is the biggest one right here. Get you a notebook that's specifically dedicated to investing. And here's what you do. You have to you have to you have to exchange excitement for preparation. Too many times I hear people excited to trade and they're not prepared to trade. You know what exciting leads to? Exciting leads to over leveraging, trying to trade a 3.0, a 4.0, a 5.0 on a 20K account and not understanding that you're going to get stopped out at the 5% daily max, right? I'm talking about instantly. Excitement leads to buying high and not realizing you're about to run into an order block, and then your trade is about to, because you waited until the price gained momentum instead of doing your work early and entering closer to the launch pad. That's what that's our specialty right there at LYMG. We're going to enter close to that launch pad. We're going to have elite stop losses. Our risk management and our leverage is going to be A1 every single time. And we're going to risk somewhere within the same range every single time. So you'll never hit that daily loss limit. All right. Risk management is super important. That's a whole nother video. All right. But you need to get you a notebook, exchange your excitement for preparation. So as excited as you are, you need to be as prepared as that, right? Exchange that excitement for preparation. So when you make a mistake, because it's inevitable, right? It's inevitable. Take the emotions out of that and write down the mistake that you made, right? And every single day, this is another goal right here. This is another principle way of thinking. People who hit their goals set goals more than the average person who doesn't hit their goals, right? The average person only sets goals one time a year. And do you know when that time is? New Year. New Year's, new me, new job, new location, new weight, new this, new that. I'm about to do my new thing. This is my chapter. No, I'm for real this time. I love that part. No, I'm for real. Like I said this before, but it's just something in the air. And it's like you really live that life every single year, the same thing over and over. You don't get tired of it, right? So that's why they don't hit their goals, because they don't do check-ins with themselves. If they said this was the goal I set on January 1st, okay, January 15th, how am I looking? February 1st, how am I looking? February 15th, how am I looking? March 1st, how am I looking? They are more likely to hit those goals, but they set goals and forget them. You see what I'm saying? They set it and forget it. A lot of people do the same thing with trading. You try to forget what you did in the past because it hurts, and you look at all the opportunities that you missed, you look at all the money that you feel that you could have made, so on and so forth. And so You don't write down your mistakes. You don't journal. You have to take your emotions out of it, journal your mistakes, and literally put it like this. Here was the trade I took. Here was my entry point. Here was my stop loss. Here was the result that I wanted. Here was the result that happened. And then you write down why you lost that trade, right? That documentation process alone is going to piss you off because it's so tedious, but it's tedious for a reason. It's like when cops say they don't want man, all this paperwork. Like in the movies, when the cops be like, if I take you in, I got to do this paperwork. You know what I'm saying? It's the same thing. So if you lose this trade, you got to do this paperwork. So when I enter a trade, I want to make sure that I'm entering for the right reasons. I want to make sure that I'm trading with the trend, right? I want to make sure I'm trading with the trend, number one. Shout out to the ice maker. Crazy. I want to make sure I'm trading with the trend, right? I want to make sure on the buy that I enter low. I want to make sure on the sell that I enter high. I want to make sure that I did a top-down analysis so I'm in confluence with the overall market, right? And I'm going with the trend. I'm on I-77 and I'm driving north. I-77 north and I'm driving north. I'm on I-77 south and I'm driving south. I want to make sure everything is confluent, right? Right. So now, once I have my notebook and I wrote down all my mistakes day after day, whatever trades I take between Sunday night and Friday, I'm going to set my alarm every week. Most of us have a smartphone, right? You can set your alarm every weekend at the same time. I like Saturdays. I like Saturdays or Sundays before I enter the market again. Set a time to read through the mistakes that you made. Set a time to read through the mistakes that you made, your journal entry, and then now, next week, you're not going to make the same mistake. You literally dang near 100% kill the chance of you making that same mistake again because it's already documented. And you're thinking from a principle standpoint. So you're making sure you don't mess up on the principles. There's a trillion ways to get details wrong, but there are not many ways to get principle wrong, right? If I principle thinking, red means stop, yellow means go. Yellow means caution, and green means go. If I stopped at a green light, there's only one other way to correct it. Go. If I went through a red light, there's only one way to correct it. Stop. You see what I'm saying? I don't give myself a whole bunch of options. Or where you going 25, where you going 50, where you going this, where you going that. You get caught up in the minutia of the details, get the principle right. So did I buy in an uptrend? Did I sell in an uptrend? Oh, that's where I messed up. Did I buy in a downtrend? Oh, that's where I messed up. Did I try to enter? Am I in a downtrend? But price is, and let's say I'm trading on the 1 hour, and price is running into a daily launch pad, a daily order block that's down here, and I'm trying to sell, and price is running to a daily launch pad. But because I didn't look at the higher time frames first, I don't know that. So I just have my 1 hour candle, and then it does this, and then boom, bounce up. I was in a mismatch going the wrong way. You see what I'm saying? I had a 1 hour candle mismatched against the daily order block. That daily order block beat my 1 hour candle and boom, went all the way up. That's what happened. You see what I'm saying? So just knowing little things like that is going to help you. I'm guaranteeing you it's going to help you pass your prop firm challenge. Now, if this added value to you in any way, I encourage you to truly, truly, truly hop in, join, take your leap with the LYMG family. Because guess what? The last step that is ultimately going to guarantee you is having a team that could hold you accountable, right? Because every day isn't going to be perfect. And every day you might not be able to be there and watch the charts. Shout out to one of our team members, Mr. Brooks. He is an educator, right? So he can't have his phone on him, things like that, or he can't be watching charts, watching the news. So as a team, he's one of the many people that we keep updated throughout the day while they're working. Okay. Hey, this news just came out and it's this sentiment and that plays well for this trade that we're over here with. Da, 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 da. So we'll send a markup to him. We send a summary to him that he's able to process and synthesize in less than a minute and make an informed decision based off of the markup, the news sentiment, the trend. Everything is there for him to see. So now he can enter his trade with confidence, set his take profit, set his stop loss. We already have the leverage and the lot size out there for him. And then he can go on about his day, teaching children, raising our future, right? So that kills the excuse that you don't have time. That kills the excuse right there. Okay. So that's it right there. Like I promise you, you follow those steps right there. So let's just recap. Let's go ahead. Number one, we are going to do what? We're going to remember, go with the flow, buy in the uptrend and buy it low. So your price has room to go up. It's like buying a house that needs improvement. Bam, you buy it low, and then you bring the value of the house up. Stop trying to buy high. That's consumer mindset. Consumer mindset, you want to buy the Gucci belt. That's $1,000. Investor mindset, I want to buy the Gucci belt at a warehouse price or not at the retail price. I want to buy it at a wholesale price for maybe $30. And I want to get everybody to talk about it and get you to buy it for 1,000. Seller's mindset. Oh, I don't wear those shoes anymore. I'm gonna sell them now that they lost value. Oh, we didn't farted holes in the couch. We didn't farted holes in the whole couch. Now we want to sell it for low. Consumer mindset, investor mindset. I want to sell while the value is high. That way I can get the most return for it. I want to sell while the value is high. I want to buy while the value is low. I want to sell while the value is high. All right. Principle. You see what we're doing there? See what we're doing there? All right. Now, second one is top-down analysis, right? I want to start with the highest time frame, mark off my order blocks on the highest time frame, get the overall trend, do my extensive markups on the medium, and then enter on the low. That's going to allow me to take advantage of the mismatches. It's going to allow me to take advantage of all the mismatches. Plus, I'm trading with the trend. All right. All right. Third is going to be what we talked about in terms of go rewind the video. No, I'm just playing. Get you a journal. Get you a journal. All right. Get you a journal. Become a scientist. Stop letting data. Oh, this is a good one right here. This is a good one. Make sure you write this down. Old school style pen and pad. All right. Stop letting emotions corrupt your data. All right. Stop letting emotions corrupt your data. Stop over leveraging on trades because you were excited or because you thought something was going to happen, right? And then write down all the trades that you missed or what you messed up on. Write down the reason that you lost and look at it like data. Don't be emotional about it. Don't be emotional about it. Take it in as data. Synthesize it as data and then grow from that for the next week. When you take this principle-based approach, you're going to literally minimize the mistakes that you make with the more experience that you get. A lot of people have a lot of experience in trading. And because a lot of you all don't have supervision or no accountability or a team, you make the same mistakes over and over and over. You get frustrated and you quit. All right. And then you think it's a scam. And now you're trying to find the next get rich quick scheme. This is what it is, right? Sounds too familiar. It's crazy, right? It's almost like been there or something. It's almost like, yo, he might really do this for real, for life. Like, and it's funny because it's people who want to sit up here and talk about creating generational wealth, but you'll see this video is close to 30 minutes and you can't even take 30 minutes out to really get something that's going to help you make 4, 5, 6, however 6, 7 figures, however much money you want to make per month, per whatever. This is what it is. All right. Almost like I do this for real, huh? Almost like we really have an organization with 300 plus people in it, right? Almost like we really help over 12 people get funded this year and a bunch more coming. Okay. All right. And then finally, get with the team, take your leap of faith, join LYMG. I would tell you somebody else to join, but I just don't know any other team, I promise you, where we call it the new era of finances. Effective, right? Relatable and affordable. I don't think I know nobody has the these three qualities like we have. They don't embody them like we do, right? People call me crazy all the time for the price. The price is so good, I don't even talk about it out loud. You could just click the link in the description and see, right? And see what the price really is. All right. So effective, relatable, affordable. It's effective because it works. We have an 80+% win rate, right? Relatable. Look, I'm gonna break it down in so many different ways. I promise you. I learned from the best. I learned from the best. I could break things down in parables. Whatever illustration you're into, whatever your learning style is, we're able to break things down because we've dealt with so many different learning personalities and we come from an education background. All right. All right. And then affordable. What we talked about before, the price is ridiculous. The problem that we did have recently was that I had to tell clients this: stop. And I'm firing some clients. It's a joke. It's a joke. If you've ever seen Billions with Mike Prince, he fired all his clients. You know what I mean. But it's a joke. Though. I love the team. I don't even consider people clients. They're family for real. But I had to tell the team, a lot of y'all got in early, so don't just value the course at the amount that you paid for it. That's a consumer mindset. Now, I can talk to you from a consumer mindset, but then I'm gonna have to text you, and that text that you're paying is basically stupid text because you can't realize that you have a diamond. You know what I'm saying? If somebody gave you a diamond and you skipping rocks with it, you're stupid because you don't have the discernment and the wisdom to realize this is a diamond. You haven't gone through enough things in life to appreciate that somebody gave you a diamond, so you don't know everything that you can do with that diamond. You don't know how you can add value, how that diamond can add value to you. But if you were to pay $20,000 for the same diamond, you would protect it with your life. You see what I'm saying? You would put it in a safe, or you would show it all over the place and show it proudly. But when somebody gave it to you at a certain price, you don't do that. See, as an investor, it's like if I gave, and this is why I put this here because I want to attract people with the investing mindset. If I give an investor a house in a promising neighborhood that is growing, that is starting to thrive, and it has good bones, house is built from scratch, nobody's lived in it before, and I say, hey, you can have this for $5,000. Oh, by the way, here's 10 of them. You can have all 10 of these for $5,000. And you look around and the comps say that the average house on that block is selling for 450 grand. They'd give me a hug. They would be like, what is wrong? Huh? I don't know what's wrong with you, but I'm taking them now. That's 50 grand. And then I could flip all 10 of these for 450 grand. I just made at least 9x the money. You know what I'm saying? That's the reason why LYMG is priced the way it is, because I want people to be able to have the resources to spend on investing, investing one-on-ones, continuing education. Get you a membership to go buy you some books. Like, you know what I'm saying? Get you a membership to Audible, listen to audiobooks, get your mind right, get your mentality, get your mindset right. But I want you to have the money to be able to get the right tools to make investing a lifestyle, because that's what it is. It's a state of mind, it's a lifestyle. Everything is invested, even how you invest your time. I'm even starting to have the clients see like, oh, the first place you messed up was how you devalue your time, because you go to work and you work an 8-hour shift, and no matter how much you want to speed it up, you can't fast forward to 8 hours, but you will find a way to manage and get through that 8 hours. But then you will look at this video right here and say, oh, it's 30 minutes. And now, because you're the CEO of this free time that you have, you might not even make it to this point. So you might not even make it to this point to even watch the video, because your attention span is so short. But only when you're in charge, your attention span is not short enough to decide I want to get my 40 hours back that I'm giving somebody else. You don't think you're capable of that because you devalue your free time. So if you devalue your free time, you're going to try to project that on the other people and think, well, this dude's sitting here on the couch in a do-rag, don't know what he talking, doesn't know what he's talking about. But if you got to this point, you already see like, oh, he knows something. He knows something. This isn't one of those fluff YouTube videos that just talks about nothing and just try to sell me. Hey guys, the three best ways to number one. I'm not going to talk to you like you're a kid. You're an adult. You want to make adult money. You want to make granddaddy money. You want to make grandma money. You want to make oil painting in your great grandkids' house money. You want to make generational money. I have to be able to talk to you like an adult, and I'm gonna make it relatable. And I'm gonna be me. I'm gonna do it with a do rag on. I'm gonna do it without my beard oil on. I'm gonna talk to you on some real stuff. I'm recording this at 2:25 in the morning. You see what I'm saying? So look, if you made it through this, God bless you. All right. You'll get some good stuff right here. All right. Tap in with the LYMG family. I promise you it'll be top three best top three. I said top three. It'll be top three best financial decisions that you ever made. And it's not gonna be number three. All right. It may not be number two. Great chance it's gonna be number one. All right, but let's build, let's rock, let's work together. All right. I love you. I'm here to add value to you. No fluff for me ever. You don't no fluff. If you see me on your screen, we get into it. All right, let's get it. Run this up and share it with some real people too. Like run this all the way up.